$38 trillion in debt, recession fears mounting, but Wall Street has a secret weapon, AI that can predict crashes before they happen, managing risk at speeds humans never could. There's just one problem. That same AI is quietly eliminating 300 million jobs worldwide. This is the paradox that could break the global economy. We built an intelligence to prevent the next 2008. Instead, we may have created something far worse. The machines designed to save us might destroy us first. To understand this paradox, you first have to understand what AI did to finance. For decades, Wall Street operated on human intuition and spreadsheets. Traders made split-second decisions. Risk managers analyzed what they could. But when 2008 hit, the system collapsed because humans simply couldn't process the complexity fast enough. So finance did what it always does. It evolved. By 2025, over 80% of financial institutions had integrated AI, up from just 45% 3 years earlier. These aren't simple algorithms. These are systems that analyze millions of transactions per second, predict fraud before it happens, and assess global market risk simultaneously. PayPal's machine learning catches fraud in real time while reducing false alarms. Companies like Zest AI improved risk prediction accuracy and cut losses by over 25%. 86% of financial institutions report positive revenue impact. The promise was simple. AI would be our crystal ball, seeing crashes before they happened, managing the $38 trillion debt crisis with superhuman precision, and it worked. But while AI was saving the financial system, something strange started happening. Corporate profits were robust, GDP was rising, but hiring in finance, tech, consulting, marketing, and law stopped. Welcome to the white-collar recession, not driven by economic collapse, but by AI replacement. For the first time in history, scientists, engineers, designers, and lawyers now account for a greater share of the unemployed than manual workers. This has never happened before. The numbers are staggering. Goldman Sachs estimates AI automation could affect 300 million full-time jobs worldwide. The IMF warns that 30% of jobs in advanced economies face high risk of AI substitution. But these aren't predictions. It's already happening. Klarna cut headcount by 40% using AI. Duolingo stopped using contractors entirely. Salesforce eliminated 4,000 support roles, stating bluntly, AI can do 50% of the work. And these companies are thriving, revenue up, stock prices up. They don't need a recession to cut jobs anymore. They have AI. Then, in early 2025, the International Monetary Fund delivered a warning that most people never heard. Geeta Gopinath, the IMF's first deputy managing director, stated, "In a world of widespread AI adoption, the technology could convert an otherwise ordinary downturn into a much deeper economic crisis by disrupting labor markets, financial markets, and supply chains." Here's the mechanism. During good times, companies invest in automation but keep workers around. During downturns, they let workers go to cut costs. The IMF found that since the mid-1980s, nearly 90% of automation-related job losses occurred during recessions. But here's what's different now. The pool of replaceable workers is bigger than ever. White-collar knowledge workers now account for nearly 45% of total employment. Up from 30% in the early 80s, JP Morgan's senior economist warns, during the next recession, AI adoption might induce large-scale displacement for cognitive workers. The next labor market downturn could look pretty dismal. But the job losses are only half the paradox. Financial services have replaced older trading algorithms with vastly more complex AI systems that learn on their own, systems so advanced that even their creators struggle to understand their decisions. This is shadow AI. Black box systems making billion-dollar decisions with logic no human can fully explain. The IMF warns of a terrifying scenario. During a future downturn, with patterns these systems have never seen, they might all react the same way, becoming overly conservative, rebalancing towards safe assets, and triggering a cascade across the entire financial system. It's herd behavior at machine speed. The very AI designed to prevent crashes could trigger one bigger than anything humans could create. Historian Yuval Noah Harari warned, AI has the potential to create financial devices far more complex than the collateralized debt obligation that crashed the economy in 2008. Imagine a financial system no human can understand and therefore cannot regulate. We've built a system too smart to fail and too complex to save. And here's what makes this truly dangerous. Financial AI evolves in months. Regulations take years. The gap is widening. The people writing the rules can't keep up with the systems they're supposed to control. By the time a regulation is drafted, the AI has already evolved 3 generations. We're not just racing toward a crisis, we're racing toward it blind. So here we are standing at the edge of the AI paradox. We created this technology to prevent catastrophe, to manage complexity beyond human capability. But in making finance safer, we've made the economy more fragile. In optimizing for efficiency, we've eliminated the workers who drive consumer demand. In creating AI to predict the future, we've built a future no one can predict. Some argue there's still a path forward, that human AI collaboration, not replacement, could prevent the worst outcomes. That if we slow down, build oversight, and keep humans in the loop, we might navigate this transition without catastrophe. But that requires understanding systems we barely control, and right now, we're not even trying. 300 million jobs at risk, $38 trillion in debt, and an artificial intelligence managing it all, designed to save us from the next crisis, while possibly creating one we can't survive. The code is written, the systems are running, the transformation is already here. The only question left is, can we survive what we built to save us? What do you think? Is this the price of progress or a crisis we can still prevent? If you want to understand the technologies reshaping our world before they reshape you, subscribe and hit that bell. The future satisfies no one who waits. Let's stay ahead of it.